This is Robert with Virginia Farm Bureau's Grain Division, bringing you the Merchandiser Minute today, Friday, March the 26th, 2021. We've had another exciting week of influences on the futures and the basis markets, and one of the things that stands out to me this week is maybe no one thing stands out. We had a lot of influences, but it seemed that no one story drove the trade. No matter really what commodity we're looking at. We want to take a look at some of those numbers today and talk about these influences. Let's look at what happened in Chicago. We closed out the last full week of the month. We've got May corn down 5 cents to close at $5.52. May beans down 16 cents to close at $14 even. And July wheat down 10 cents for the week to close at $6.09. Again, a lot of positioning by the speculator funds this week as we get ready for next Wednesday, March the 31st, the prospected plannings report as well as the quarterly stocks report. And maybe we could say with all three of these commodities being down for the week, some consolidation, some getting out of some long or some bought positions on the board this week. When we take a look at the ranges, I thought this would be interesting to bring up today. The May corn futures contract has had a 30-cent range for the month of May. May soybean futures have had an 80-cent range for the month. So we've been trading up and down in those ranges. And remember, even though we're down for the week, we have not damaged the trend line on the futures chart for corn or for soybeans. A little bit of a different story for wheat. We're ending the last week of the full week of the month here. Wheat is down at the lowest levels from a futures price perspective for calendar year 2021. And we have damaged that trend line on the wheat chart. You can take a look at that and you'll see that. So with increased participation in the hard wheat belt over the last few weeks, speculators have gotten out of some of those long positions. And we'll look to the Commitment of Traders report again this afternoon to see just how long those specs are in the wheat market. When we look at USDA this week, we got just an amazing export inspections report on Monday. What got loaded out the previous week? 77 million bushels of corn got loaded out. Top destinations, Mexico and China. I know we say that a lot, but they're good partners right now for buying U.S. corn. 77 million bushels loaded in 1 week, I'm told, is a top 5 week since the government has been keeping these records. Now, when we get to soybeans, top destinations loaded out, Egypt and Mexico, 18 million bushels, and that is a marketing year low. Since this marketing year started on September the 1st, 18 million is a marketing year low, and we know, we've said it here over the phone and in this space the last couple of weeks, we know export shipments are picking up dramatically in Brazil. That's cyclical. That's what's supposed to be happening this time of year. So it's normal to see those shipments fall off here in the U.S. Top destination was Japan for our wheat. And then when we get to Thursday and we looked at those export sales, just an amazing export sales report for corn. It reflects those 4 days last week that China bought corn on the flash sales system 4 days in a row. And how timely was that? They timed things really good. Last week, remember, our officials, trade officials, met with their officials in Alaska to talk about trade, and they made those 4 big corn purchases in a row. So China and Korea were the top, South Korea were the top buyers of U.S. corn. Bean sales came in as expected with Egypt and India on the list, and wheat as expected, South Korea and Japan. When we got to Wednesday, we looked at the ethanol report. A big surprise this week in ethanol, a surprise decline in production and a surprise increase in stocks. We did use 93 million bushels of corn for the week, and we're just going to watch that going forward, wondering if we're going to get more ethanol sales on for China in the coming weeks. Let's take a look again, a couple of interesting trades this week. We saw soy oil go limit up this week in at least one session. We know Malaysian palm oil and soy oil compete around the world for vegetable oils that wind up on our dinner table. We got to keep our eyes on that. We know there are more rumors traveling around the trade about African swine fever. You've heard me say that for about 4 weeks now. You're seeing it in your review of influences as well. We had lean hog futures gap higher on the opening this week multiple times. We're at levels we haven't been at in hog futures. Just take a look at that June futures contract in a long, long time. So a lot of anxiety there over unknowns about what's going on with ASF and the hog herd in China and how that might impact U.S. pork and pork production. We did see a lot of news this week about the Suez Canal and the container ship that has that canal blocked. Certainly sorry for all the people involved in that situation with it happening, and looking forward to seeing how the people that are involved in getting that ship out of that harm's way and moving. The last report I saw shows 150 vessels waiting as the canal is closed. We did see some big volatility up and down in crude oil this week because of that canal being blocked. I think crude oil is probably going to close the week about $3 a barrel lower. We saw news about the House prepping for the next spending bill. They say this one's going to be focused on infrastructure. And at the same time, different government sources are telling us our debt is pushing the $30 trillion mark here in the U.S. The USDA announced it's releasing the latest round of coronavirus food assistance program money. That was actually, as y'all know, approved by Congress last year. The Biden administration put it on hold for review. They've made some changes, and now those funds are going out. See your local FSA office for that. And Secretary Vilsack also talked this week about carbon and carbon credits, carbon banking as well, and it even came up in part of his remarks about the Commodity Credit Corporation and that it might be on the table to discuss how that could be used with carbon credits. So we do know we need to stay on top of this. I've got a lot to learn about it. We can read directly what Secretary Vilsack has said, but remember, one of the emphasis for the next 4 years with the USDA is going to be on carbon and how agriculture can play a role in that as well. So big news for next week, March the 31st, we've got our prospective plantings report. We're going to see what you said in the survey, how much you're going to plant. We're looking at the average guess of 93 million acres of corn, 89 million acres of beans. That's a 182 combined. That should be the largest in history if y'all are able to do that. We also get the quarterly stocks number on Wednesday as well. What was in the bin as of March the 1st? The average trade guess, 7.7 billion bushels of corn, 1.5 billion bushels of beans. Especially on the beans, that's a huge reduction from March of last year. We'll see what the USDA prints. We'll see how the speculators trade it. Please give us a call on Monday or Tuesday. We can talk about marketing plans ahead of this report. This is Robert at Virginia Farm Bureau's Grain Division.